everybody. How we doing out there? Doc Severson with you. ReadySetCrypto Fractal Energy Coaching session number 4. How's everybody doing? Today is Tuesday afternoon, and again, not much going on in the markets today. Very little the last couple of days. A couple of actual red candles. So we'll take a look at that later on if you guys are interested in looking at some coins. All right, what I want to go over today here is we kind of wrap things up is we need to put everything together. So we've talked about session number 1, single time frame price action. Session number 2, multiple time frame price action. Last week we talked about energy. And today we put everything together. And so I've just got some tips for you guys to how to go about putting everything together. All right. Yeah, we got our bit connectors out there. How we doing out there, guys? Okay, so I have some tips for you guys on how to get started with this, because I think for most of you, you've had along the way, you've had a couple of like aha moments, like, oh, I get that. And then you go back into a live market and all of a sudden it's like, hey, I don't get this anymore. Or, this looks strange. I don't understand. And then maybe later on you have another aha moment and then you go back into the live market and then it doesn't seem to work anymore. And the answer to that is to take it slowly. Take it one piece at a time. Eat that elephant one bite at a time. Don't just jump in there with 16 different time frames and all kinds of studies and everything like that. Nothing will make any sense. So that's going to be one of my things today that I want to go over. The most common obstacle that people run into with using fractals is the complexity. So all of a sudden what people run into is they say, well, wait a minute, I thought I understood price action, but I've got one chart going this way, I've got another chart going this way, and I've got this one is full of energy and this one is exhausted on energy, and I don't know where to go. I don't know who wins. Okay, that's partly answered in the program, certainly, but we'll go over that again today. So this is where people get kind of tied up in knots. So a question, why do I trade and lose every time? There's actually an answer for that, at least one that I found that happens more often than not. So it can be easy to get lost with multiple time frames. Multiple time frames, this is where you need to put the puzzle pieces together. If you just have a jumble of puzzle pieces out there, if you're just looking at different things without any semblance of order to them, it's just not going to make sense. This is why you must use a methodical progression when you're using fractals. So hopefully by now you guys have seen at least a hint of the power of this system, how it allows you to kind of frame things in so that you have a much more structured approach to the market, instead of putting a bunch of squiggly lines on there and hoping that somehow you'll divine some kind of guidance from that. Usually that doesn't work out too well. So, step number 1, focus on determining the trends in price. Start from the top down. So start with your largest time frame. Most of the time that's going to be your anchor chart, and then work your way down from there. Do this the same way every single time. Do it the same way every single time. Kind of like how you put your shoes on in the morning. It's the same way every time, right? So what you're going to do is you're going to come along here, and it doesn't really matter what time frames we have here. We have a weekly, we have a daily, we have a 240-minute chart. First thing I'm going to do is to say, what is the trend here? The trend is going to the upside. Trend is going to the upside. And on the daily chart, we have trend going to the upside, but we have a short-term consolidation. And then what do we have on the 240-minute chart? We have a series of higher lows, but lower highs. Higher lows, lower highs. So that means that there's no trend on the 240-minute chart. Okay, so that's the first thing you want to do. And of course, this one is the most powerful, followed by this one. And then, quite frankly, this one doesn't really yield us that much information about the trend. But it can help us at some point as we talk about the entry. Daniel, I have not been doing much trading lately in today's market. I wait for things to come to me. Now, we've done some swing trades lately. A few swing trades we found on screeners. Those have been working out okay, but those are few between. Right now, your best technique is to be patient and wait for the trend to come to you. Don't force it. Don't bang that square peg into a round hole. We will start to get markets moving again here soon. Here's step number 2. What are the energies at each time frame? So again, we're going to do this from a top-down perspective. Start with a top-down, move down, move down. Will one time frame limit or affect the others? This is where we start to get into what's happening here. So if I look at this, if I look at the energy on the weekly chart, I can see that this is exhausted. So we have a big old exhaustion where we have enough energy and enough energy here. So as we put all this together, maybe we are bullish because the trend is working to the upside. We have a consolidation here. So ultimately, maybe we're looking for a breakout from this level, but it's not going to do us any good until we clear this exhaustion signal on the weekly chart. So this is how I'm always saying you got to put the puzzle pieces together. You have to go across here. You have to start 1, 2, and 3 and figure out from an energy perspective where you are sitting. So it doesn't do you any good if you have a great signal, perfect signal here, great signal here, everything looks good, if you have an exhaustion signal that's on your anchor chart. That's going to be one of those things where maybe it takes off a little ways and then it gets hauled back into the pattern. This is very common to see a failed breakout when you have something like this. All right, so that's step number 2. From there, step number 3 is, what is your long-term trend forecast? What is your long-term trend forecast? And then number 4 is, what is your short-term reversal forecast? So the trend forecast in the previous charts, obviously we have a longer term uptrend. We have a daily chart, which is in consolidation. We would expect at some point the daily chart, kind of like a dog in the leash, right? If you're walking your dog in a leash, if you're heading in this direction, maybe the dog takes a little detour and then all of a sudden the leash gets tight and it gets pulled along with a larger time frame. So my longer term forecast is that we would probably be breaking to the upside. The shorter term forecast is that we're showing this small consolidation pattern, and my shorter term forecast is that we have to see which way it wants to break, right? We can't just assume that it's going to break to the upside. I mean, that would be convenient if it does, as long as the energy was good there. But we may even have a false break on this triangle. And we've seen this a million times before, is that we get a false break on the triangle, which creates a larger pullback on the daily chart, and then it's ready to go. And meanwhile, by the time it's finished all this monkey business down here, the weekly chart has recharged. So again, this is where everything kind of comes together. Notice how putting a short and a longer term forecast together does not depend on your bias, does not depend on some kind of clairvoyance about where you think prices are going. It's merely in terms of the trend and the energy. So never forget that price is king. Though we talked about this last week, we said price is king. Price is king, and price will always, always supersede, override, dominate whatever energy levels that you have. Now, if you do have exhaustion at some anchor chart or larger time frame chart energy levels, you may see the trend slow down sometimes. And this is where I see people getting all bent out of shape like, wait, it can't do that. Yes, it can. Price can do whatever it wants to do. We trade at the pleasure of price. So always, 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 if price is telling you one thing, believe that. Okay, so price is king. So some final tips here before we get into your questions. So today's mostly going to be based around your questions, any examples that you want to bring up, anything like that you want to. So I don't have a whole tremendous amount of prepared material. So this is where you guys come to me with your questions. So start thinking about examples or questions that you want to bring up, and we can solve that problem together. Some final tips for you here is your ability to use the system will be only as good as your acceptance to trade what you see and not what you think. If you have a bias, if maybe you don't realize it, but maybe you've got a really bad case of confirmation bias. And I see this happening all the time. You guys may like a particular analyst. We see this in the Discord page all the time. People posting like, I really like this guy, XYZ or some other podcast or some blog. And this happens to retail traders all the time, is that you'll kind of fall into like with somebody and say, wow, he really resonates with me. I like the way that that guy snaps his fingers and does his thing. And so whenever that's actually very, very powerful. So when you sort of fall in line behind these Pied Pipers of markets, subconsciously you're getting a bias. And so if they say something, well, quite clearly XYZ is going to happen. What happens is the old confirmation bias will kick in. And then what you will do is you will try to bring up a system that confirms what so-and-so was saying. Look, it happens all the time. And this is something that you've got to find a way to get rid of. That's one of the biggest obstacles between you being a run-of-the-mill retail trader and somebody that's truly a professional, is your ability to cut through the fog and stop listening to everybody else and stop listening to the same information as everybody else and start forming your own opinions. Because once you form your own opinions, number one, number two, once you find your thing, then you've got it. And quite honestly, I'm speaking from experience here. I was the same way as everybody else, searching from one person to another, looking for that guru that was going to, magic dust comes out of their fingers. And I didn't start making money until I started putting things together myself and started coming up with a strategy for myself, because that is when your subconscious mind will allow you to be successful. It will not allow you to be successful if you're just going to follow somebody else hook, line, and sinker. If you're just going to follow along with them, because it knows, your subconscious mind knows when you've done the work. If you've not done the work, if you're just following somebody else, what will happen is it will step in the way and it will prevent you from having profits. That's just the way things work, because it's trying to protect you. It's viewing somebody else's opinion as a threat. It's viewing somebody else's trade setup as a threat. There's nothing to it. And you'll feel it the very second that you take somebody else's trade and it starts to tick against you. And you'll see this anywhere, right? You'll see this in the Discord page. You'll see this in chat rooms. You'll see it in Reddit. Hey, what do we do here? What do we do? What's our stop? What's our stop? All of a sudden the brain starts to panic, right? Because it's not yours. It's not your trade setup. And so this is why I'm always telling you guys, you got to find your one thing, number one. Number two, risk management. Set up that trade with fixed risk capital so that you've wiped it away. You've set that boat on fire. You pushed it off the shore. You've given it the old Viking funeral. You don't care what happens to it. Then and only then can you effectively manage the position. So back to my point here, your ability to use this system or really any other system will only be as good as your acceptance to trade what you see and not what you think. Watch out for the bias. The bias will kill your ability to effectively trade. So if you bring a bias into any system, it will render it useless. What I'd like to see you guys do is adopt an if-then-else approach. I want to see you guys turn yourselves into a spreadsheet with an if-then-else. And what I mean by that is, the price will come into any particular range. It'll set up a high, it'll set up a low, and then it will sit there and you'll say, well, what's going to happen here? Well, we kind of know if it breaks above here, that's confirming the high. Otherwise, if it breaks to the downside, like this, and forms a new low, that is a lower high, and it's changing polarity to a downtrend. You don't know which is going to happen. You don't know which is going to happen. You can give a probability. You can assign a probability to one or the other. But this is where I see retail investors. Again, they cling to a particular position. They think it's going to happen. They've brought a bias into the discussion and they want to see that happen, right? So you've got to be able to trade what you see and not what you think. So again, what will you do if the price breaks higher? What will you do? Maybe you're already long. Maybe you just move your stop up. Maybe you don't have to do anything at all. But what would you do if the price puts in a lower high and starts to trade lower? Or what would you do if the price just goes sideways here and doesn't do anything? The biggest problem that I see with traders and getting a bias for something like that is usually they're on the wrong side of the price with too large a position. Remember my rule number 1 and rule number 2 of risk management. What is your exit, regardless? And then make sure that it's not too big. But usually that's what people do, is that they go all in on something and they only have one outcome in mind. And they don't really account for a secondary or tertiary outcome for that. And once you do that, it's almost like, I don't know if any of you have ridden motorcycles before. So I'm sure a few of you have been on two wheels, and it is serious business. It is, I had to learn how to drive all over again when I got my license, because I attended a couple of Motorcycle Safety Foundation courses, like advanced, I forget the name of them, but it was like advanced traffic management or something like that. Basically, it was like how to stay alive, how to be an advanced defensive driver or defensive rider. And what you're doing is you're like thinking 3 steps ahead. Okay, so here's this guy, he's off to my right. I'm going to assume that he can't see me. And I'm going to assume that he's just going to change lanes without knowing it. All right, so maybe I better not be here. Maybe I should back up a little bit and give him some room. Let's think 2 to 3 steps ahead of it. And this is almost what you have to do here, is with an if-then-else approach to your analysis. You're thinking, hey, this could happen, or this could happen, or this could happen. You're giving it flexibility to do whatever you want, so you're never surprised. There's nothing worse than having that kind of deer in the headlights feeling, like, oh my God, it went the wrong way. What do I do? What do I do? And you're not ready for that. That's the worst feeling in trading ever. I hate that. And I never want to feel like that again. And so a lot of the effort that I have in my own trading is to kind of think through what I'm going to do should the unthinkable occur. Okay, so, all right, Einar, I've got XRP. I'll come back to XRP here in a little bit. I will get through these slides pretty quickly, actually. Okay, so there are 3 possible directions the price can take. The system only shows us the probability edge with trend and energy, right? So we're taking trend. We're making the grand assumption that if we have a larger time frame anchor trend, that it's going to keep on going. That aircraft carrier, even if you shut the engines off of it, that aircraft carrier, it's still going to coast for quite some ways in the Pacific. What will you do if the price goes in any of the 3 directions? Remember, technical analysis is not for predicting the future, much unlike some people would have you believe. It is for you to figure out what you will do based on what the price will do, right? So, integrating this system. First off, if you never really got the ability to read price on one time frame, I would slow down, do some hard right edge, do some replay if you have to, if you've got a package that allow you to do that. It's very, very helpful. And kind of learn how to frame in the price, because you're trading right off that hard right edge. You don't know what's going to happen next. So learn how to read price on one time frame before you get, all these time frames stuck up there. Learn to incorporate fractals with 2 time frames. So after you learn how to read price, and maybe you're ready to go multi-time frames, start with 2. Don't go straight to 3 or 4. Start with 2. Learn how those 2 work together. Have an anchor, have a signal. You might find that that's all that you need. Many strategies that I trade today, that's all I need. I just need 2. I don't need 3. I don't need 4. It's nice to have 2 and 3. There's very, very few times that I will pull up four time frames. If you are a swing trader, or if you're just looking to get a good entry into a longer term position hold, I would say weekly and daily is going to be fine for that. For most swings and position trades, just stick with a weekly and daily for that. Or only add the 4-hour or 3rd time frame based on your need to fine tune the entry. If you go with a smaller 3rd chart, it will allow you to better fine tune the entry. Right now for crypto, there's really not much use for a monthly chart, quite honestly. There's really no point in a monthly chart. If you're trading equities, if you're trading commodities, if you're trading foreign exchange, a monthly might be useful for you. I use a monthly, weekly, and daily when I'm trading equities. Okay, short-term trades, if you're more interested in doing the scalping intraday or just being flat by the end of the day and just looking for signals intraday, maybe you could use a daily, use that as an anchor time frame, and maybe you're going to be taking a 4-hour chart. Actually, a daily and a 4-hour would probably be something where you're in the trade for a couple of days or so. If you're going to be much more short-term trading, maybe it's going to be a daily and a 1-hour chart. You could use a 25x, 1x type of scenario. All right, so you can even go smaller than that. You can have a 1-hour anchor chart if you want to, and then have a, what would that be, a 6-minute chart? 12 divided by 5, something like that. I can't even think right now. So keep working until you find your time frame and your trade. Right? Don't bounce around. Try things, and iterate until you find something that really works for you. The worst thing you can do, and this is what everybody does, is you get impatient. You try one thing and it's like, well, that doesn't work. Let me try this. That doesn't work. That doesn't work. This doesn't work. You bounce around, and next thing you know, you give up. And I've seen this so many times. You've got to slow down. You've got to slow down and listen to yourself. What makes sense to you? Listen to your gut when it comes to that, and find the things. There's an expression that Brett Steenbarger has, and I've made mention to this before. But this is what you got to find. You got to find your rage to master. You've got to find your rage to master. You've got to find something that fascinates you, that you can't put it down. It's going to be a style of trading. It's going to be a certain time frame of trading. Maybe it's going to be futures for some of you. Might be for others, it's going to be something to do with more like trend trading or position trading. Find your one thing. Find your rage to master, and then don't bounce around. Stick with it, and keep iterating. Think of, there's sometimes when people learn how to parachute, instead of just taking a plane and then, going up here and then dropping, sometimes what you'll see is that you'll see these places where you'll have somebody attached to the back of a car through an extremely long rope, and you just keep sailing and parasailing and sailing, up until you finally detach, and then you float to the ground. Think of it that way. Think of this sort of ever-expanding circle of competence that you keep getting better every trade that you do. Okay, so let's go into, I think that's the slides that I have for you guys. Let's see. Okay, yeah, it is. So I've got a question. Let me write down some of these and make sure that I get back to everybody. Yeah, like I said, Danny was asking, has anybody been able to make profits in today's market? You have to be very quick, very decisive. You have to be able to spot swings, and we are able to spot some swings. There have been some, like Genesis Vision and Link and things like that, are getting into stair-stepping mode. But your profits don't hold through the whole thing. What you're looking for breakouts, or you're entering in the pattern, and you're looking for an average swing length profit taking. You know, maybe you're only making 10% on the trade. But that's the only thing that I see working in today's market. Even the shorts are just not working today. Just nothing's moving right now. And I think this is not going to last for very long. This is not going to last for very long. Range contraction like this leads into massive range expansion. Daniel, when the price is at an all-time low, how strong of a buy signal or support is it? So let's, and I know that there's a delay here, but if you could give me a coin or an asset that you want me to look at, which is tied in with that. Usually if something is at an all-time low, meaning that it's not just revisiting support, it's truly at an all-time low, then I would say avoid. I only like buying stuff that's heading higher. If there's one thing that you can pick up from this program, it's trade in the direction of the trend of the anchor chart. Trade in the direction of the anchor chart swing. So I want you guys to write this down. And I will write this up here. And I'll try to be as neat as I can. Trade in the direction of the anchor chart swing. Okay, so what does that mean? That means if you have an anchor chart that's doing something like this, and maybe it's even in a downtrend, and let's say our anchor chart is going to be a weekly chart, we can trade within that anchor chart swing. So we can take some longs in here, but you're going to have to be Johnny on the spot. You're going to have to be very quick with that, taking profits. So you can trade within the direction of the anchor chart swing. When the swing starts to head higher, if that's your anchor chart, but the overall trend is to the downside. If you want to increase your odds of position or of success, trade in the direction of the anchor chart trend as well. So that is where you're starting to stack your probabilities. But at the very least, trade in the direction of the anchor chart swing. Very minimum. So if something's heading lower, I typically like to buy stuff that's heading higher. And it makes it simple, right? Okay, so Daniel, as ZEC is an example of something at an all-time low. Okay, so let's blow out of this. Let's go over to our chart and let's see ZEC. And we'll just use that versus BTC if that's all right. Zcash. All right, so what is our trend here? If we look at the trend, if we look at a weekly trend, which way is this heading? So Zcash right now is just heading lower. It's just lower lows and lower highs. If you're trading this long, I mean, this is the only weekly swing we've had to the upside. So you can't even take this long right now until you start to see something where you're getting a decent swing to the upside. So right now you should be hands off on this one. Sean is asking, Doc, how long did it take you in your trading career to get into your groove and figure out your style? Oh, Sean, I've done that several times. The one that was probably the most important was the first time. So I know I've told this story before, but it was actually kind of a neat environment. I had taken an options training program, and I invested heavily into this. This was a big 5 figures into this program, as did a bunch of coworkers. And so there we were at this telecommunications firm, and we had a whole floor of us that had all taken the same in various degrees. Some of us took more classes than others, and some are more serious than others, but everybody was drinking the same Kool-Aid. And so that was very helpful because it kind of gave you, you had people to work with and bounce ideas off of. So just like what we have on the Discord page, it's very important to have that community. So I was the guy that would study harder than everybody else, and I knew more stuff than anybody else. But what was frustrating, and it was bugging the rest of us, everybody really, was that nobody was really making any profits with it. And that really got to me one day, because it's like, look, I know 30 different strategies on how to make money up, down, or sideways, and selling and buying and these different derivatives and everything like that, but I'm not making any money. What the hell is going on here? So I'm like, all right, let's cut out the noise. And this was something I came to my own conclusion on, is like, let's cut out all the noise. Let's narrow it down. I only want one chart, one strategy. So imagine only trading one crypto. That's it. I was only going to follow one crypto, and I was only going to do one strategy on it. Now, fortunately, in this case, this was the S&P 500. It moves around a lot. There's no shortage of opportunity with that. And I picked one strategy that I could play day in and day out. And it was not very long. I would say it was only about a month. Once I dedicated myself to that, where I was consistently winning trades. And what you find is that when you start consistently winning trades, that rage to master really starts to build in you, because all of a sudden you see a payoff for this and you say, wow, well, this is great. I can do this. I can do this. I can do this. And then you want to do even more. You want to work even harder. You want to stay up even more. And then you start seeking out other people that know that specific one piece of information or do that one trade. And you'd be surprised that after maybe a month or so, all of a sudden I became the expert at this one strategy on this one stock, because I knew more about it than anybody else, even coming in through supposed experts. So a lot of people were telling me how to get into the trade, but they weren't really completing the whole deal with how to exit it, how to risk manage the trade. That's what was missing from it. And so that's what I had to almost invent on my own. And once you start doing that, once you start diving deep into something, you found your thing, right? As long as you got that rage to master, as long as you've got that. So I would say, to answer your question, it took me about a month to get expertise on it. And from there, I think it was about 6 months later, I turned in my notice. I said, I'm done. I'm out of here. I can't do this anymore. I have to go do this other thing. That's about how long it took. Now, market conditions will change, but again, what I'm teaching you here in this class can be applied to any market anywhere. So yeah, you can apply this towards crypto. You can apply this towards foreign exchange, options markets, stock markets, currency markets, commodity markets, whatever you want to do. It doesn't really matter. It's the same no matter which way you go. Okay, Touch the Sky. What additional value is in the swing trading class compared to this one? The swing trading class is more about entry, so I go more into like pullbacks versus, there's different pullback strategies. This is not, the fractal energy trading is much more of a type of breakout type of strategy. I identify high energy levels, look for the breakouts. Pullbacks are better off with oscillators. If you're really dead set on going into pullback strategies, oscillators, or there's one in particular that I use, which is called the RSI Laguerre. And I'm trying to find a way to map that over to TradingView to use that with cryptocurrencies. So there's various different things, but a lot of it is just for people that are getting into shorter term strategies as well too. Okay, Daryl, you're okay. So you're reaching out to Einar. Awesome. Einar, in this market, everything depends on the Godfather, which is Bitcoin. So what's the point of watching all the other altcoin movements? Well, I would say it depends on what's on your watch list. So we have a lot of trades that are actually, doing, like some of the ones on the watch list are actually doing quite well in terms of movement. So an example of that we bring up is like Chainlink. Chainlink is going into stair-stepping motion. So we had a breakout a couple weeks ago, and it's building up energy again. I'd like to see it spend another couple of days here. Let's make sure that the weekly chart is not exhausted. Okay, that one's actually looking pretty good as well too. So Chainlink is an example. So just because something is beholden to the Godfather Bitcoin doesn't mean that everything is not moving. We have also Genesis Vision has been a good little mover lately. And it's broken a bit of a trend line. A lot of these, they'll move for a month or two, then all of a sudden they'll get kind of flat. So Metaverse was one of the ones that we looked at. Metaverse was looking really good. Went for the breakout here, just got kind of pulled back in, right? So we're still holding on to that one with a fixed risk position. But that's what I'm seeing in this market is that you'll get ones that kind of come off the bottom. They get about 3 months of movement where all of a sudden everybody piles into them. Like, my God, something's moving. Let's get into it. And then you'll see the money rotate elsewhere. But nothing's really sustaining itself. It's hard to achieve that escape velocity with the gravity of Bitcoin right now where it is. Okay, so Bryce is saying, let's see, I recall you mentioning stair-stepping your exits. Can you elaborate TP and exits? I need help with that acronym. TP? Tango Papa, what does that stand for? And I'm going to be embarrassed when you tell me what it is because I should know that. Okay, so I'll just answer a couple of what I see. So Grant is saying, what options are there, if any, for price data for other altcoins that are not covered in TradingView? Well, here's a great example, and this came up through the Discord page. Like, here is investing.com. If you got to cryptocurrency and go to the streaming, like Digitex is not, you can't chart it right now in TradingView, but you can in investing.com. And look at this, it's got a TradingView plugin, so you can actually pull up the chop index, which is kind of cool. So that's something else that you can do. Oh, profit target. All right, well, that's why I was confused. Okay, so what you want to do is with something that's, let's go to Chainlink, and actually Genesis Vision is a good one because I've already got this one set out. So there's a concept called average swing length. Average swing length. So just think ASL. What you'll see is the average swing length. So when something breaks out, let's go with a bigger red one here. When something breaks out from a consolidation, how far does it go? When something breaks out from a consolidation, how far does it go? When something breaks out from a consolidation, how far does it go? And so obviously the first one is going to be a brand new occurrence, but what I'll do is I'll come down to here and I'll grab a little trend line and say, okay, this one was about this long. Let's see, this one was about this long, a little bit longer. Okay, so for the third one, if we were to chart a breakout from here, what would I do is I would say, well, if it breaks out, it's probably going to get up to about this area up here. And there you go. So it's simple. Now, I know there's all kinds of complex ways to calculate these things, such as fib extensions and things like that, or fib circles. And it's like, guys, just keep things simple. Typically what happens with a coin, the other way that you can do this is look for exhaustion, right? If you have exhaustion on your signal chart that you're taking the trade off of, sell into that. Don't try to hold it for too long, because you can see what happens here. If you went for the breakout, and if you didn't sell into strength or sell into exhaustion here, all of a sudden you're underwater now. And you're like, curses. So if you're trading short term, sell into strength. It's a different skill than position holding. So last week I went over some of the turtle trading and how they took profits. I mean, they hold through 10-day lows. They hold through. They're willing to give back a lot of profits. And this is what you'll find is like, once you start getting into short-term trading, is like, this will just irritate you guys, because you'll be way profitable and all of a sudden you got to endure a pullback and you're like, oh, all right, I'm just going to sell out. And as soon as you sell out, boom, it's off to the next leg. So understanding how price moves will really work to your favor down the road, guys. Okay, so Sean is asking, so that was that, Bryce, that's my answer to you on determining TPs. Okay. Sean, given all the news that comes out, even from reliable sources, what tips do you have on dealing with and minimizing confirmation bias? I know one guy, I'm not going to mention his name here, but he's fairly well known in circles, that he stumbles out of bed. So the U.S. market opens at 9:30 Eastern time. He stumbles out of bed at 9:15. 15 minutes before the market opens up, and just immediately sits down, and all he's got are the screens. He will not open up the news. He will not open up any of the news sources. He will not do anything in terms of that. Nothing. Because he knows that to taint himself with a bias is deadly. And so that's what he will do. Now, this is just something that you have to learn. Like, you start to learn this, Sean, after a while, is like you start to hear something on the news and you're like, as soon as you hear something, you start to think opposite. And it can create some problems with family and, you know, children and stuff like that, because all of a sudden you start to take it to that degree that you don't trust anybody at their word. Because you almost have to get to that point of like, you know, when you hear about something, you're like, okay, it's probably going to do the opposite. And this is the one place where I've seen where more often than not, you see something where just the opposite happens all the time. Like what happened the other day, we had Amazon, of all companies, right? So what is the press report? Amazon sets new records for bottom line profits. So they set a new record for bottom line profits. And so what happened? Straight down. Straight down, because a couple of reasons for that. You know, they felt, well, okay, nowhere else to go now. And also because of the top line revenue was a little weak looking forward. And that's all it did. But all anybody else is going to read is like, oh, record profits, let's buy. Markets will have got a mind of their own, and it will do exactly the opposite of what everybody expects them to do. All right, touch the sky. So if you think of investing for long-term, would you also just buy coins which trend upwards because of the danger of still heading downwards? Yeah. Don't, guys, there is, and maybe you guys haven't heard me say this before, but there is no medal, nor is there a plaque that will get mailed to your house. Nothing. There's no medal for buying the exact bottom tick of the market. And I think that tends to get, I think there's so much ego that goes around of that. And you see this ego manifested out in social media and Twitter, like, hey, look at me, I bought the bottom tick. Or you see people say, hey, look at my video from this date 3 weeks ago. I said that this was going to happen. And look at this, it happened. I predict the future. Guys, that stuff is crap. It will not get you anywhere. So buying the bottom tick of the market, catching the falling knife, is not going to do anything, right? If you look at this, think about this for a second, all right? If we go back in this and we take a weekly chart of old godfather of Bitcoin here, if we just take a weekly chart, did it matter if you didn't get in here? And let me just go with I'll just go with price and volume here. Did it really matter if you didn't get in here? So let's really zoom this thing out. So if you didn't get in, until 700, did it really matter? Or maybe you got in at 1,000, or maybe you got in at 1,300. Did it really matter if you didn't get the bottom tick? So there's this whole sort of, I don't know, just sort of culture awareness of, hey, I got the very bottom tick of the market. I got in down here at 220. I rock. I'm great. It really doesn't matter. Keep things in perspective. Maybe if you had just waited until things confirmed and got in at 475, what's the difference? What is the difference? And the same thing happens on bear markets as well, too. Getting in at the very top tick doesn't matter. Shorts are always way, way, way too early. And what you find is that with the volatility, there's always a way to get in to the downside very close to the top as well, too. So that's one of my frustrations, is that I would say 95% of all of our investing education comes from where? Comes from television commercials, comes from movies, comes from the various broadcast media. And these are very, very powerful images that just do not go away anytime soon. I mean, so you grow up hearing things like, greed is good, buy low, sell high, buy the dip. And then, we're getting this whole generation of kids coming along that, just buy the dip and hodl and things like that. And that's really, if you read some of the classics that are out there in investing, that's really not the way that money is made. HODL certainly is, but be judicious about that. Hold things that are going higher in price. Be willing to get rid of things that are not heading higher in price. That's the one thing that the pros would always do, is that would very savagely sell off something that is not performing for them. So I could probably go on for hours on this stuff. Okay, so we answered Grant's question. Oh, TP at target price, I got it. Hello, Ann. Genesis looks like it's ready to buy. Chop index rising, looks like it's hit bottom. Yeah, the one thing with Genesis is that you got to watch out for, and we've had this with a couple of other coins too, is like we've gotten some nice swings off the bottom. So Genesis was, see if this is one of these. So Genesis, I think, was one of these. All right, so if you look at this, if we go out to the Chop and Bollingers, the problem here with Genesis is, and this is exactly what I was talking about earlier on, is like nice swing up. We're playing in the direction of the anchor chart swing, so we want to go long, right? But what's happening here at the energy? The weekly energy is no bueno. It's exhausted. So why would you want to go long right now in Genesis, right? So this is how you have to fit the puzzle pieces together. This is one of your filters. So, certainly a lot of people are going to look at Genesis and say, oh, look at this. It's awesome. It's awesome. Look at this. Range contraction, range expansion, range contraction, expansion. Here we go. We're back to a trend line again. And we're building up energy. But look out for the weekly chart. So what we can expect now, again, this is not predicting the future. This is just putting two and two together, is that maybe we'll have a little bit more of a corrective pattern here, because this is the weekly chart pullback. This is, again, where you're putting all those pieces together for you, right? You have to use more than one time frame so that you have more of an anchor view about what's going on. So for Genesis, I'm not going to chase this one up here because I'm expecting a little bit more chop, chop, chop up in this area, which will allow the weekly chart to recharge. So again, this is why it's helpful to have those two panes, at least two panes on here. Now I'm not doing that here just so I can focus on one time frame for you guys, because it gets too small if I start to build out the panes. All right. Sean, what advice can I share with impatient traders about observing the golden 2% rule, especially with a smaller trading account? Okay, so here's what I get from people is like, so you guys are aware of the 2% rule. So the golden rule of risk management equals 2% per position. And so somebody with, say you have $5,000. Well, 2% of that is going to be, unless my math is wrong, $100. So you're going to be risking $100. And so even if you get a full double on the position, if you nail it out of the park and if you double that position, your 100 goes into 200. And you're like, so, okay. Yeah, I'm not going to be quitting my job next week based on $5,000, right? So your job right now is, if you have, and this goes to a whole other different discussion, Sean, because I've taught classes, and maybe this is something that I will do soon, but I've taught entire courses on how do you trade a small account, because it takes a completely different point of view and a different purpose to trade a small account. So if you're trading $5,000, you're going to, again, this is where I think people do you a huge disservice, because you'll see emails out there and say, I took my $5,000 account and I turned it into $10 million. Okay. So never mind that he started off with 5,000 and he did not organically grow it to $10 million. Okay. Is that possible to organically grow something from 5,000 up to 10 million? Yes, it's possible to do that. It's mathematically possible if you use the right exponential leverage, if you use something that I call fixed ratio money management. So the more profits that you make, the more risk that you can take, because you're playing on more house money, right? But you have to have a fantastic system, and you have to be incredibly, incredibly disciplined to do something like that. So is it possible? Yeah, it's mathematically possible. I think it's nearly impossible to accomplish something like that unless you're just like, feeding money left and right and taking more leverage with that. So I think your goal is, if you have a small account, your goal is to learn how to trade. Your goal is to learn how to make money, because once you learn how to make money, there are unlimited possibilities for that. Are you kidding me? It's like, if you know how to make money, if you know how to create returns, you'll have people knocking at your door to help them, just beyond your own account. So your goal right now, that's your base level goal, is for everybody here, is to learn your one thing, right? Learn what your specialty is. Pick one specialty, get really, really good at it. It will take you less time than you think to get really, really good at one thing. The reason why a lot of people take so long is because they're bouncing around. They become a jack of all trades and a master of none, because you're bouncing all over the place and you're not staying in any one place for long enough to get expertise at it. So the sooner that you can figure out what you want to focus on and gain expertise on, the quicker that you'll be able to make progress. This is specifically what happened to me. Is like, once, that was the biggest thing that I ever did, was just cut everything else out. Because once I did that, I started to really run. So that's part of it. But again, back to a small account, your job with a small account is not to necessarily make money. And it's certainly not to double it or triple it or times 10 or whatever. It's not your job to do that. Your job is to learn how to make gains, learn how to get edge in a market, because while you're doing that, you can be feeding that account. You can be feeding that account, because if you have a small account mentality, then you're going to be flying right over the tops of the trees. You're going to be flying right over the tops of the trees, and all you have to do is dip a wing, get snagged by a tree, and then down you go. And you know that in the back of your head. And so you're not going to be, it's going to be very difficult for you to be effective as a trader like that. So the best thing you can do is to learn when you have a small account like that. So again, I can go off for hours on this whole topic alone. Okay, let's see. Oh, XRP. Einar, want me to do XRP. Okay, let's do XRP. Let's do Ripple Dollar on, let's do it on Bitstamp. Okay, so let's see. I might do this on, let's do it on the white layout here, because we got 3 different ones. Looks like I didn't do this correctly. I didn't set this up right. So I'm just gonna set this up. Yeah, the way you have to do that is you have to go up here and you have to do symbol. So everybody runs off of the same symbol. That's how you do that. XRP USD. There we go. Now we got it. Okay, so what is our, let's look at the trend. What's our trend? We have no trend. We still have lower highs and lower lows, lower high. So far, there's a higher low and a lower high in the weekly chart. Okay, what's our trend on the daily chart? There is none. Now, let's play a little bit of what if. Let's play a little bit of if, then, else on this. If we have the price breakout, I would say above here, then we would have a higher low, higher high. We'd have a reversal, and we'd put in a very important higher low on the weekly chart. So if we're able to see Ripple trade above 50 cents, 48 to 50 cents or so, then it could be an important long. Now, there's no guarantee of that, because until it actually trades above, what is that, 75 cents or something like that? Yeah, it's about 75 cents. Until it actually trades above that peak, then it's going to be questionable, because it can still put in a lower high up here and roll over. What I found is, though, that peaks like this tend to become targets. So whether they're peaks to the upside, or sometimes we'll see, hammers like this that come along, they tend to be targets. Like the old expression is, in a sea of sand, a single flag that sticks up becomes a target. Okay, touch the sky. Let's see. Now I have to find your original question. Yeah, you can average. Okay, so dollar cost averaging represents, so you are there's a lot of religious opinions based on dollar cost averaging, right? So dollar cost averaging depends on what? Dollar cost averaging depends on one thing. Dollar cost averaging depends on the price eventually reverting back to the mean. And in the equities markets, you can make a pretty good case that over time, and certainly over the last 30, 40 years, that's been the case, is that eventually dollar cost averaging works out because things revert, right? I honestly don't like it that much, because there's no guarantee. See, we're into this, the same analog as we were back in 2000, 2001, 2002, 3, 4. Like, okay, is this company that I just invested in, pets.com, is it going to make it? So we have, and we don't know the answer to that with a lot of these coins, especially these altcoins. We don't know if they're going to make it or not. I wish we could look 5, 10 years forward and just invest in the ones that are going to become the next Amazon.com or Facebook, things like that. But we don't know what they are. So right now, to prevent against that, I would only invest in things that are going higher. Quite honestly, I would prefer not to do dollar cost averaging and buy things. I'd prefer not to chase things down the hole right now. I want this to prove it to me that it wants to go higher. Okay, so Grant, a follow-up question. I'm all for diversification, but at some point, wouldn't you take a larger position than 2%? Yeah. So if you look at the way that we built our portfolio in the newsletter, we've got some positions that are like 12%. So Mav has said, okay, Doc, put 12% in, but I'm not going to add it all at once. I'm going to build it up 2% at a time, or maybe even less than that, right? So nobody's saying that you can't use a good chunk of your portfolio, right? Your entire account, but keep each position size relatively small. Keep it granular to the point where you don't care about it. So you can build up a position, especially as something goes higher. If something is working out in your favor, you can add to that position. I think that's a better way to do it. Okay, so Anne is asking, why would DGTX drop if good news is coming in Malta? Okay, so first of all, let's see if we can expand this out here. So here we have, well, first of all, I wouldn't exactly call this dropping. So right now it's in consolidation, because if we go out here to something like let's see, do we have a weekly chart? Yeah, we do. If we go out to the weekly chart, we can see that, and we don't even have enough weeks of data on this thing, but we've had some extreme range expansion, and I would expect to see a little bit of range contraction on this guy. Okay, so this is just trendless. This is just consolidating behavior. What you're finding though is like, look, we all knew about Malta back here. We've known about Malta for months, right? So things are priced in basically 9 months ahead of time. So unless there's some new piece of information, and I think a lot of this was to do with the expanded distribution through a new exchange. And I think if actually more stuff, if they're able to actually pull off their demo at the exchange, we might get a little bump out of it. We might get a little bump, but then there's going to be another flattening of this. There's going to be another consolidation from that, which is like, okay, sounds great, but we still have to get these guys to, they have to actually produce in the beta. Are they going to be able to do it? So if they're able to actually do something in the beta, they will be rewarded. This is where you'll see this stair stepping. So at each stage of and if they're not able to produce, that's where you see a deeper pullback. But everything's in advance. Everything's in advance. Okay, Sean, given the many possible variables that can affect price, how do you follow rule number 1 and define an exit when you have no idea where the price will go? There's a lot of different ways to do that. So what Sean is saying, like, okay, so if you enter something here, where do you set your exits? Well, first of all, it depends on whether this is a position trade or whether it's a swing trade. Is this a scalp? What is this? So there's all kinds of different types of trade that this could be. A position trade is something you might want to hold for years, right? And so if it's a position trade, I don't know where my final exit is, but I can say with certainty that I know, like, well, look, if it comes down back into the pattern, then I'm just going to blow out of it. Or maybe what I'm going to do is I'm going to enter my initial position with 2% risk, and I'll define it so that I really don't care what happens to it. And if it starts to stair step, then I can add another 2%. And now what I can do is I can say, look, as long as the price holds this trend line or some other factor, that I will stay in the position. But I can do that ahead of time. So as the trade, I always like adding a don't care type of position as the initial sort of toe in the water. So that's my sort of Viking funeral, the fixed risk position where I can just start off with 2%. So even if that thing burns to the ground, I don't care. Or I can give it time to like reverse and come back up again. That's always a good way to start. And then as you're proved right, as it starts to earn your trust, then you can start to worry about where your stop is going to be. But if it's a true position, you're worried more about the stop instead of taking profits. But there are going to be times where I will look to sell into strength on something that's just going berserk. And actually some of the Turtle Trader rules that we're going to follow are meant to keep you into a longer term trade. But you have to endure some pretty deep pullbacks with those. All right, low liquidity versus high liquidity. What are their effects on choppiness and price? Zero. There's no correlation between the two. If there's enough liquidity to move the price around, now I'm trying to think of a really awful charting coin. Maybe we can look through some of these here. We can look through some of these, and most of the ones that I look at are actually pretty good. Oh, we can go down to the screener and look for some garbage down here. Let's see. See if we can find something that's lousy. Actually, Dogecoin was looking pretty awful. Yeah, Aaron. Yeah, it's, Sean, it really, if it's able to move the price, it won't really show. It won't affect, the liquidity will not affect, unless you're getting these massive candles that are just tip to tail or just huge because there's no control in there. That will affect the chop. Grant, I've heard it stated that the probability of the descending triangle Bitcoin is currently in to break to the downside is 70%. Do you agree or not? Oh, well, let's find out. Let's find out. Let me find. Give me a second here, and I will tell you what that is. And I'll actually bring up a flashcard here. Descending triangle flashcard. Okay, I think this is the screen that I'm on, or I could go over here. Bearish descending triangle pattern. Success rate is 55%, which improves to 96% if you confirm the pattern with a close below the downside breakout. So these numbers come from Thomas Bulkowski. So I got it straight out of his book some years ago, but they don't really change all that much. So right now I'd be looking at about 55%, which is slightly better than even odds. So again, what I would love to see, let's go to the main portfolio. What I would love to see here is, let's pull this in. Since everybody is looking for Bitcoin to crash from here. I'd love to see something that does almost like a one-day wonder. Maybe gets down to 5,000 with true capitulation and then sets the hook. I'd love to see something like this occur. And it can happen too. I've seen that more often than not. When everybody expects the same thing to happen, usually the market finds a way to punish those people for pedestrian thinking. So Sean is asking about minimum liquidity, and that can be difficult to answer. A lot of times I will base that based on the chart. If I see, like, I'd be totally comfortable trading just about anything that's on. I can usually just look at the chart and tell you the answer to that. So a lot of these, if I have the price action doing what it's supposed to do, then it's got enough liquidity to do what I need to do. Now, liquidity to me is more of a, if you have poor liquidity, then you're going to get more monkey business in terms of your stops. So you're not going to have enough depth of market to be able to avoid somebody pushing it down and stop hunting. But I haven't seen anything in here that I would avoid on any of these. So if you're getting good, true price action and not just stuff that's just bouncing all over the place, then that's enough liquidity. But the more, the better. So anything that's in usually the top 20 is certainly liquid enough, and that's generally what we're spending our time to do. Well, there's Sean is asking about upcoming classes. There's two that I'm considering right now based on the interest that I've gotten. One would be is to transcribe the Turtle Traders program into crypto. And it's actually a little bit more difficult than I imagined to do this in a way that's easy to convey. So something that's not that simple is if you say, okay, buy the 20-day high. And if you think that's simple, then you haven't looked at a 20-day, a chart showing a 20-day high, because there's a lot of permutations to that. So what I have to do is to come up with ways to apply this that's very simple for people to pick up. But the thing about the Turtle Traders is if you are truly a position trader, in other words, you want to hold something for a long period of time and just like squeeze all the gains that you can out of there, then this is a phenomenal system for doing that. The other thing I'm looking at perhaps setting up a course in is how to trade using BitMEX. Now I know that that's a bit of a conflict here based on, hey, I thought you were into Digitex. Well, I am into Digitex, but quite honestly, it's going to be months before they're ready for market. So I am going to be part of the beta, so you'll hear everything that's going on with the beta from me. And as soon as I can put something together to show you how to trade Digitex, I'll do that. And I'll do those in like trade schools and things like that, just to get you guys up to speed on those. But yeah, it may turn into a formal course eventually, but right now there's a lot of activity on BitMEX, and there's a lot of noise that's out there, and there's a lot of things to do, and there's a lot of things not to do that's on BitMEX, and that will be part of that class if I'm able to do that. Okay, any final questions? Anything else relating to the Fractal class? I don't want to turn this into another coaching session here. I want to keep it focused on the fractals here because this becomes part of the archive for this class. Now, don't forget, I'll probably be teaching this class again in another 3 to 4 months or so. So when it makes sense to re-offer this class, I will do so, and I will spin up another coaching session, and you guys will all be invited to that one. So it comes with alumni are invited to attend for free because you've already paid, right? So I find that is really, really useful because by that point, you'll have had 3 to 4 months of experience with it, and then you can really provide some great discussion when it comes to the coaching sessions as well, too. Let's see. Any upcoming sales on? Why don't you reach us offline on that one, Grant, and let us know. All right. Any final questions? Anything else that you guys want to take a quick look at? Any other comments, questions? I will look just take a quick look across the board here and what's going on. So Bitcoin, again, this is barely moving today. We almost have to basically just poke these things to see. We will get some movement out of here relatively soon, guys. Markets don't. Here's VeChain. Again, this is a good example of something that you might want to avoid for right now. So unless you're really interested, unless you're super committed to getting this one at the lows, and again, I don't know that this is necessarily a great idea. I would wait until it starts to trend higher before you start to accumulate. Let it prove to you that it's going to be a long-term player. And I would say that about just about anything here. So whether it's a Zilliqa or a Tron or any of these things, a lot of them are really cheap right now. It's very attractive to just go skate in, because that makes us feel good to buy something really, really cheap. But it's not going to make you feel any better if something you get for cheap becomes cheaper, right? So buy things that are going higher. This is learn from Jesse Livermore. Learn from the masters that have done this, more than 100 years ago. Let's see, Polly. I would say if you guys need to get in direct touch with us, the best way to do that is through email, support@ReadySetCrypto.com. Sometimes the Discord can be almost too much because things roll off the top, and sometimes we get into religious discussions in the Discord page, and I'll just sort of tune out of that, and I won't know about it. So always, if you need to get a hold of us for a question, please reach out to us through email. All right, so I don't think Polly is chartable, if I can type. Oh, it is. How about that? Okay, so polymath. You can see now this is a pretty hefty weekly swing. Now there's not enough candles on here to even print a chop index. So you got to be careful of this one. This looks like a fairly linear move on a lot of volume. All right, so polymath is on Binance. So I'd be cautious of this one. I would expect this one to consolidate on the weekly chart. Let's go out to the daily chart and see what we have. The daily chart looks pretty good, but that's a very linear move. That's actually a linear move that's actually gone a little bit more parabolic. So a lot of people chasing after polymath. There is no shame in allowing this to consolidate first and set up a better buy point. Just like what we've seen in Digitex, there's always another way to get on board these guys if you think that they're running away from you. Okay, let me write this for those of you that couldn't hear me. Here is my email address if you guys want to get a hold of us for anything. support@ReadySetCrypto.com. So it goes into a Zendesk service. So it gets captured, and then it gets assigned to Mav or myself or whoever grabs it first, and it gets tracked. If you send it directly to Mav or myself or our personal email addresses, a lot of times it just gets rolled over because there's a lot of people, there's no way to track it, right? So a lot of times we're sort of task driven with these sort of things. So if you just want to say hi, do it in the Discord page. If you have a support issue or just a question about your account or something like that, I would send it to support@ReadySetCrypto.com, and it will get to one of us. Okay. All right, guys, we're going almost, we're about, what is this, about 80 minutes into the session here. I think we've answered all the questions. So please, guys, if you run into any issues with the fractal energy, and have any questions, or you're almost there and you get pulled back again and you're looking for that one little spark, please reach out to me and let me know if there's something I can do. Or I can always set up a trade school session for those of you that are subscribers to the daily newsletter. I'm doing a couple of trade school sessions a week. You can always request a topic and through that, and there you go. So it's always a way to answer a question through something like that. So those are always fun. Otherwise, I will see you guys again here in another 3 to 4 months when we run this class again and we run another coaching series. All right, guys. Thanks, everybody. Appreciate you guys hanging out with me here today. And we will be talking at you soon. All right. Take care, everybody.
Aside from my soul, there goes a sight, now there goes a sight from my soul, there goes a sight from my soul. There goes a sight from my soul. I bet the angels just walk by.